Hello and welcome. My name is Lade Araba, and I am Managing Director for Africa at Convergence. I'm based in Nairobi, Kenya. Thank you for tuning in to our discussion today, where we will be introducing Aceli Africa, which is a new market incentive facility in the agricultural finance sector. And we'll also be introducing the three donors who've already committed a combined $30 million to the initiative. Today, you will hear from Brian Milder, who is the founder and CEO of Aceli Africa. And following his introduction to the initiative, we will invite senior leaders from the Swiss Development Corporation, IKEA Foundation, and USAID to formally announce their institution's funding commitments to Aceli. We will then have a panel discussion with representatives from the three funders, as well as Aceli Africa and its partner, the Uganda Agribusiness Alliance. Now, I would like to start by providing some context on blended finance in the agriculture sector in Africa, and especially looking at emerging data trends. And I will end with a brief overview of Convergence, who we are and what we do. So what is blended finance? At Convergence, we define it as a financial structuring approach where concessional capital is leveraged to create a risk buffer that improves the risk-return profile of these deals in order to attract private investment at scale. So if I move on to my next slide, the reason why it's so important is because historically, we have seen around $200 billion worth of financing from traditional sources of development finance, which would be donors through official development assistance, as well as philanthropic organizations providing grants. But in aggregate, that's only around $200 billion. There's still a $2.5 trillion funding gap. And the only way to plug that is to attract private investment. So blended finance ultimately pulls in the private sector by delivering attractive risk-adjusted returns that are commensurate with what investors would typically obtain in traditional investments in developed markets. It creates impact because the underlying transactions are ultimately contributing towards the SDGs. And ultimately, there's also leverage. What this means is every dollar of concessional capital is able to pull in $3 to $4 from the private sector. Why is blended finance so critical? There's a variety of reasons. I've highlighted a few of the risk factors that investors would typically appraise, and I'm just going to touch briefly on a couple of them. First is the fact that liquidity is a challenge in a number of emerging economies. We know that financial systems are not as sophisticated. The local capital markets are often shallow. These present major risk factors for investors who are contemplating participating in transactions in these markets. We also know that investors have an information asymmetry, not necessarily understanding the local context and some of the risks that are present and how to mitigate those risks. There's also volatility, there's political concerns. So all of these are why blended finance becomes so critical, because ultimately these risk factors are structured through these blended approaches that effectively transfers some of these transactional risks to the concessional capital providers. And moving on, in agriculture, we've seen that about $3 billion has gone into 46 transactions in sub-Saharan Africa. It's quite interesting to note that historically, these financing flows have really targeted ag finance in general, have been utilized to purchase inputs and also to support agro-processing. We've seen that most transactions that target agriculture in sub-Saharan Africa have really provided concessional capital, either in the form of subordinated debt, primarily, or even junior equity in some rare cases. We've also seen quite a lot of technical assistance being provided across the entire investment cycle, and to a lesser degree, credit enhancement, as well as early stage grants. Now, I'd like to conclude by briefly touching on who Convergence is. We are the global network for blended finance. We generate proprietary data, market intelligence, and deal flow with the ultimate objective of increasing private sector investment into SDG-related projects in developing countries. Convergence also provides grants for innovative blended finance vehicles that have the potential for scale and replication. And it's poignant that we have Aceli here today, which is the purpose of this conversation. Aceli is a partner of Convergence. We provided a design funding grant for the design of the vehicle, and we're very excited to see the progress that has been made thus far. We also recently published a case study on this innovative model, which can be found on our website, and we would welcome you to access the website and to download the case study and to provide your comments and feedback directly to Brian and the team. And without further ado, I would like to invite Brian to take the floor and to kick us off by answering this simple question. Why is Aceli Africa needed, and what is it aiming to accomplish, and how?
Thanks, Lade. My name is Brian Milder. I'm the founder and CEO of Aceli Africa. The World Bank estimates that growth in the agriculture sector is 2 to 3 times more effective in reducing poverty than growth in any other sector. But the African agriculture sector lags far behind its potential. Productivity is low, soil health is being degraded, farmers remain trapped in poverty, and fresh produce rots on its way to market. The question is how to build a food system that is inclusive, environmentally sustainable, and resilient to shocks from COVID to climate. Small and medium enterprises, or SMEs, are an important part of the solution. These are businesses that supply farm inputs, link farmers to markets, process crops into nutritious foods. And agricultural SMEs have the potential to lift farmers in poverty and workers out of poverty, and to reduce Africa's reliance on expensive food imports. But an estimated 3 in 4 SMEs lack reliable access to finance. And this translates into a $65 billion annual financing gap. So why isn't capital flowing to meet this demand? Anecdotally, we've known for years that most lenders view agricultural SMEs as too risky and too costly to serve. But there's never been reliable data to inform targeted solutions. In 2018, Aceli Africa partnered with Dahlberg Advisors to tackle this challenge. We gathered data from 31 lenders on over 9,000 transactions and a few $1 billion worth of loans. And we basically found 2 things. First, risk is at least twice as high in agriculture as in other sectors. And second, returns are 4 to 5% lower in agriculture than in other sectors, and slightly negative in absolute terms. So we have a status quo where costs outweigh revenues and only a trickle of capital flows to agricultural SMEs. And meanwhile, donors have gravitated to the same solution, loan guarantees, for the past 20 years. From this new data, we estimate that traditional loan guarantees address roughly 1/4 of the return gap. Aceli Africa's solution is simple in concept. We plan to use donor funding to rebalance this equation and reward lenders for the impact that they generate. This approach is not all that different from what middle and higher income countries around the world do to stimulate investment in agriculture and other strategic sectors of their economies. Aceli's goal is to demonstrate that a similar model can work in Africa and partner with country governments to adopt these approaches over time. In September, Aceli launched in Kenya, Rwanda, Tanzania, and Uganda. With funding from IKEA Foundation, Swiss Development Corporation, and USAID, Aceli does 3 things. First, we unlock increased lending to agricultural SMEs that can form the backbone of a sustainable African food system. We do this by offering financial incentives that reduce risk exposure and improve returns so that agricultural SMEs become more attractive for lenders to serve. We embed impact criteria into these incentives so that lenders are motivated to seek out and serve SMEs, creating the greatest benefits for farmer livelihoods, food security, gender inclusion, and sustainable agriculture. There's much more information about how we do all this on the Aceli Africa website. The second thing we do is provide technical assistance so that more agricultural SMEs are prepared for and can manage financing, and also so that lenders are more capable of serving them. And the third thing we do is capture data and learning to build the evidence base for local policymakers, that these approaches are a strategic long-term investment. Aceli Africa aims to mobilize 700 million in lending to agricultural SMEs that will generate 200 million in incremental income for farmers by year-end 2025. Our long-term vision is to demonstrate and replicate this model for inclusive and sustainable agricultural development. And we will only be able to achieve these goals by working in partnership with Convergence, which has supported the design of Aceli, with the donors represented on this panel, with the 20+ lenders that have signed on to make these loans, and with partners such as the Ugandan Agribusiness Alliance that will help to embed this model in the local ecosystem. Thank you.
Thank you, Brian. Now I'd like to invite Aceli's 3 anchor funders to share how the initiative aligns with their strategic priorities. We'll begin with Christian Frutiger, who is the Assistant Director General and Head of Global Cooperation for the Swiss Development Corporation. Welcome, Christian, and thank you for joining us.
Ladies and gentlemen, let me explain in a few words why the Swiss Agency for Development and Cooperation has joined USAID and the IKEA Foundation as an anchor funder of Aceli Africa. Aceli Africa sits squarely within our next 4-year strategy. In fact, the Swiss Strategy for International Cooperation has just been approved by Parliament, and one of its important pillars is inclusive economic development and the creation of jobs. For that, the role of the private sector, of a responsible private sector, is of course critical. I'm particularly thrilled about the smart menu of blended finance instruments Aceli Africa is applying. We need to provide these incentives to overcome persistent market failures in agricultural financial markets. Whereas technical assistance or first loss portfolio coverage are very well known as blended finance instruments, the origination incentives are a new important addition. Aceli Africa will also pay an impact bonus for food security, nutrition, gender inclusiveness, and climate resilient agricultural and food systems. This will allow us, as a donor, to invest taxpayers' money in specific development outcomes. Over the past few years, the Swiss Development Agency has been able to successfully invest in new blended finance instruments in Latin America. A lot of this experience, which we conducted together with an impact investor called Root Capital, will now be applied in Africa with Aceli Africa. We're first looking at the proof of concept in a couple of countries, in the 2 of the 4 countries. Then we're looking at significantly scaling up, replicating, if it works, replicating the experience in other countries, and hopefully reaching millions and millions of smallholder farmers and SMEs across low and income countries. Thank you very much.
Thank you, Christian. I would now like to welcome Per Hegenes, CEO of the IKEA Foundation. Thank you, Per.
Thank you, Lottie. Just last month in a TED Talk, my friend Johan Rockström warned us that we are now, for the first time ever, forced to consider the real risk of destabilizing the entire planet. And that the next 10 years must see the most profound transformation the world has ever known. Yet, the one thing we cannot stop doing is eating. Unfortunately, our current food system are putting an impossible strain on the planet and causing close to 70% loss in biodiversity, and therefore compromising a livable planet. And although smallholder farmers in East Africa are not the ones who cause all this, they are the ones that will be the first and most severely affected. So today, 2.5 billion people, which is about the number of smallholder farmers responsible for feeding much of the world, often go hungry themselves. So if we are to achieve food systems which protect the nature while providing everyone with resilient livelihoods and enough nutritious food, our current agri-food system needs to be transformed. And that's why we are working on at IKEA Foundation. Our aim is to help people whose livelihoods depend on agriculture to build sustainable livelihoods for their families. If we are to provide healthy and sustainable livelihoods and regenerate and protect ecosystems and biodiversity, we need to shift from the current linear and extractive approaches to inclusive, circular, and regenerative food systems. This transformation is massive and urgent, and it requires the effort of all. And different stakeholders will need to get together, and finance has a very important role to play in this. In East Africa, small and medium enterprises have great potential to create economic opportunities for vulnerable communities and improve their resilience to the impacts of climate change. However, SMEs miss out on the opportunity to scale up as they lack access to financial and technical support. So Aceli Africa's efforts and ambitions to make it easier for inclusive, planet-positive agribusinesses to access financial and technical support has really the potential to build a stable market for lending, and by that, creating more jobs and resilient livelihoods for smallholder farmers and agro-entrepreneurs. When we invested in the design phase of Aceli, we were very impressed by the robustness of data gathering and analysis on which Aceli Africa has built its platform. So we're equally impressed by Aceli's deep focus on impact and the level of ambition that Aceli has when it comes to pushing the bar for the financial sector to contribute to reaching the SDGs. So we believe Aceli is set up for success, and we will have transformational impact on the agribusiness sector in East Africa. And therefore, I'm very excited to announce our commitment of $10 million to the implementation of Aceli Africa in the coming 5 years. We are at the crossroad. We can continue to exhaust natural resources as we expand, grow, and consume, or we can reimagine the way we use land and source food. We can choose to continue to ignore small-scale farmers and agro-SMEs, or we can choose to bolster their potential to lift nations out of poverty. We know what we have to do, so let's get together and do this. We welcome and invite other funders to join us in our journey. We can change hearts and minds if we stand together for our collective future. So thank you.
Thank you, Per. And now we'll go to Chris Milligan, who is counselor to USAID.
Thank you, Lade. On behalf of USAID, I'm very excited to be here virtually, along with everyone else, to announce our joint commitment to Aceli Africa, alongside our good friends and colleagues from the IKEA Foundation and the Swiss Agency for Development and Cooperation. As my fellow speakers can attest, ending hunger requires that we not just think about the current issues facing communities today, but rather we have to always be looking around the bend by helping communities prepare for the next inevitable shock, whether that's an unexpected drought or flood that disrupts a growing season, or a health crisis like the pandemic we all face today. In other words, we need to strengthen resilience. Temporary solutions aren't enough to end hunger in our lifetimes. This long-term approach, it can be a very tall order, which is why we rely heavily on working with partners like those we're here with today, to leverage each of our unique perspectives and contributions and resources and create lasting change at scale. The private sector is one of the greatest forces for transformation in the world. And that is why USAID engages with the private sector to advance goals like ending hunger and malnutrition. But neither USAID nor the private sector can achieve these goals alone. As we're thinking about partnerships, particularly with the private sector, as Brian noted, we should also be thinking about the small and medium-sized businesses in the countries where we work. As many of you know, these agribusinesses are at the heart of emerging economies across the African continent. They're responsible for the vast majority of jobs, and they play a pivotal role in the food supply chain, by providing a steady source of nutritious food like rice, nuts, and poultry. Without these businesses, farmers would slip into poverty and people would risk being malnourished. Communities and entire countries would be affected. So USAID is proud to announce today, alongside our partners, our joint $30 million commitment to Aceli Africa to support these businesses and by extension, the farmers they serve. Their success will drive job creation and economic growth in poor communities, bringing entire countries closer to self-reliance. We believe that Aceli Africa's innovative, evidence-based, and mission-driven approach can move the needle on closing the $65 billion investment shortfall in financing for agricultural enterprises. And with the pandemic threatening to permanently shut down operations for so many of these businesses, I'm reminded that their ability to access capital now, and also once the pandemic subsides, will be critical to the success of our shared global recovery. Thank you.
Thank you, Chris. And now, with our remaining time, we're going to have a conversation with 5 panelists. Please welcome Edward Katende, who is the CEO of the Uganda Agribusiness Alliance, Annalise Withofs, who is Program Manager at the IKEA Foundation, Hans Ram, Senior Policy Advisor at SDC, Songbei Lee, who is the Agriculture Technical Advisor for USAID, and Etienne Ndatimana, who is Head of Operations at Aceli Africa. Welcome to you all, and thank you for joining us. Since this event is linked to the Global Conference on Sustainable Food Systems, I'll invite you to answer the following questions through that lens. Edward, I'd like to begin with you by asking you to talk about how you see Aceli Africa contributing to agricultural finance in Uganda.
Yeah, thank you, Lade, and thank you everybody for the opportunity to share. When Aceli came to Uganda, we were excited. As you may all know, that agriculture in Uganda is dominated by smallholder farmers and micro, small, and enterprises. Over 90% of the agricultural production in Uganda is actually done by smallholder farmers. However, lending to them is extremely risky. And Aceli coming in with their portfolio guarantees are actually helping to de-risk to a certain degree and give comfort to financial institutions. As we speak today, non-performing loans in agricultural lending are the highest across agriculture, across lending by commercial banks in the country. At the moment, there is very low provision and utilization of agricultural finance. There's money in financial institutions, but the SMEs are not accessing that money, purely because the banks are experiencing higher non-performing loans in the agricultural sector. Even when private sector lending to agriculture, private sector credit to agriculture is currently about 12.9%, which I think is the highest in the region. But the gap for smallholder farmers and SMEs is still very, very big. And as such, we are all been looking at ways in which we can increase lending to this segment. And we see Aceli's portfolio guarantees as an opportunity to enable banks to actually come in and share the risks and therefore invest more in the agricultural sector. But of course, even their technical assistance facility, because one of the challenges we see in SME lending is that a number of the SMEs are not bankable. And most organizations come with TA facilities, but the TA facilities actually target companies that are actually bigger, and therefore a number of the SMEs are left out. So we hope that the TA facility for Aceli will go a long way to help bring the bankable businesses, bankable SMEs online. And lastly, the data, because when we looked at the data that Aceli had put together with Dalberg, a number of banks in Uganda didn't know that agricultural lending can be profitable. And with this kind of data, senior management of banks are now able to see that actually they can make money if they can manage their risks better, and that can incentivize lending. So in Uganda, we are excited with Aceli's entry. Of course, it will supplement some existing risk-sharing facilities like in the Business Initiative Trust and others, but the gap is still huge. Thank you.
Thank you, Edward. Annalise, the IKEA Foundation is particularly focused on circular and regenerative agriculture. How does the foundation's support of Aceli relate to these goals?
Thank you, Lada, for the question. So yes, as Brian briefly explained, Aceli Africa will offer greater incentives to facilitate loans that meet a higher standard, in particular impact themes. So if they're looking specifically at nutrition or empowering women, or when they're particularly good for the environment. And our investment will be dedicated to the latter. So as we at the IKEA Foundation strongly believe that investments for them to be effective on the long term, need to combine building livelihoods and protecting and restoring the planet at the same time. So during the design phase, we have worked together with the Aceli team to define the criteria that determine whether lenders fulfill this higher impact criteria. And the collaborative process, I must say, was really rewarding, as it showed Aceli's strong commitment to achieving deep impact and setting the bar higher, moving beyond business as usual. And that resulted also in Aceli Africa now explicitly incorporating regenerative agricultural production practices and circular agribusinesses into their policies. And by doing so, they stimulate investments into small and medium enterprises that are truly planet positive. 20% of the loans that will be facilitated will go to companies that are not just producing, transforming, or distributing food, but to companies that are at the same time also improving soil quality, increasing biodiversity, enhancing ecosystem services in the production areas. To companies that are explicitly designing out waste and pollution from their value chains, to companies that are contributing to building a bioeconomy in East Africa. We hope that in the coming implementation phase, many more than 20% of the companies will qualify for this planet positive bonus, if you will, and that banks will increasingly start to see also the business case for it. Because really, the era of just looking at farmers and agro-enterprises as producers and providers of food, no matter what, is behind us. We need to recognize their value as stewards of the planet too, and incentivize those companies, those farmers, producers, those agribusinesses that truly shift to a sustainable food system. Aceli Africa has been set up in such a way that it can do exactly that. Incentivize those companies that are frontrunners. And we are delighted that we can contribute to that effort.
Thank you, Annalise. Hans, SDC has been working with partners to sync blended finance with impact in Latin America. How does Aceli Africa build upon what you've learned in Latin America?
Thank you very much for your question. We started a partnership initially with Roots of Impact, which is impact investment advisory company, and also the Inter-American Development Bank Lab, in order to simplify the social impact bond, which is a quite expensive blended finance instrument to be set up because of high initial costs. So we co-created what we call the social impact incentives, or the SINC, which are basically what is now used by Aceli as origination incentive. So that instrument as such is quite, I would say, a revolution. It's a very radical simplification of the impact bonds, because it only requires one contract between an outcome or impact buyer, meaning a funder, and a social business. And that contract stipulates the additional outcomes to be achieved, how to measure them, what is the price per unit, and who does the independent verification. So it requires additional investment from the private sector. And the private sector does the due diligence. So it is in that way much more simpler for the funders trying really to engage, to fully understand the business. So that is left to the social business. And the funders then basically pay ex post for agreed outcomes verified independently. So that kind of creation was for us the starting point. And then it was tested successfully by Root Capital, an innovative agriculture impact investor from the USA, and in smallholder agriculture in Latin America. So Root Capital was mainly lending to small and medium-sized agribusiness that served or aggregated many smallholder farmers, and that testing assured positive results in terms of gender, in terms of rural areas, in terms of incremental income for low income and vulnerable smallholder farmers' households. And it had also from the funder side a very high cost benefit ratio. So in a way for us, that was the proof of concept. So now coming to Aceli. So Aceli will integrate these learnings and adding new ideas. Actually, the institutionalized knowledge is basically with Brian, who was at that time the impact manager of Root Capital, and also the network of the Council of Smallholder Agriculture Finance. So in a way, that already assures that that proof of concept would be then carried over. Although certainly Eastern Africa, I would say it's more challenging than Latin America, partly because of higher country risk for investors in general, but also poorer business environments and also poorer regulatory frameworks for agriculture financial markets.
Excellent. Thank you so much, Hans. Song Bei, USAID has also been experimenting with blended finance and private sector strategies for development. How does Aceli fit into your strategy, and what do you see as unique in the approach?
Thanks, Lada. Probably for me, it's easier to describe as an evolution than a strategy. I think our oldest product for mobilizing private capital is the traditional 50% pari passu guarantee mentioned by Brian. Later, we started supporting blended finance approaches, typically in fund structures, as you described, Lada. And then more recently, we've been supporting and funding incentive mechanisms like Aceli at the loan level. So I think there's really three things that really stand out for me about Aceli that have been mentioned, but I'll just emphasize here again. The first thing is it's a data-driven approach, and this type of data analysis I have not seen before. The reviewing of over 9,000 loans in the design of their incentives. The second thing is the focus on additionality, and by that I mean they're really focusing on the missing middle. Often described as the loans that are too large for microfinance, but still too small for large commercial banks. And in this case, they're targeting agri-SME loans, small and medium-sized enterprises, between $25,000 and $1.5 million. And the third thing is really the additionality. I mean, the impact on that additionality of those loans. And they do that by really these impact bonuses that Annalise referred to, where they further encourage loans that have either a gender, environment, or a food security component. So I think it's a great approach, and we're really happy to support it.
Thank you, Song Bei. Etienne, prior to joining Aceli, you managed an agricultural SME in Rwanda and loan portfolios for agricultural SMEs across East Africa. With Aceli Africa, you're now a step removed, trying to create the enabling conditions for capital to flow to agri-SMEs, what challenges have you encountered in designing Aceli's incentives?
Thanks, Lade. So when I was managing an agricultural enterprise, one of my biggest challenges was securing capital when we needed it. So naturally, when I moved now to an agricultural lending institution, my goal was to provide timely capital so my clients wouldn't miss out on buying raw materials at the time of harvest. So I knew that a delay on my side as a loan officer, investment officer, would have serious consequences for the farmers and workers whose livelihood depended on that business. So from the Aceli data analysis that Brian mentioned earlier, we understood that lenders delay or decline to finance agribusinesses because the risk is either too high, or in the case of smaller loans, they will not earn a positive return even when the borrower fully repays. So when designing Aceli's financial incentives, we wanted to solve these economic challenges for lenders on the one hand, while aligning with the social and environmental impact that we care about on the other hand. So we decided that every loan Aceli supports should create economic opportunities for farmers and workers. We also set a higher bar and pay out impact bonuses for 3 priority areas, including 1, gender inclusion, 2, food security and nutrition, and 3, climate smart and resilient agriculture practices. So the challenge is now, how do we translate these lofty goals into clear rules that can be applied across hundreds of loans, impacting hundreds of thousands of farmers? We are fortunate that just in the past few years, several of the leading DFIs have developed a 2X challenge criteria for gender inclusion. So we have adopted that standard and require lenders to report on it. However, it's trickier when it comes to determining whether a borrower follows environmentally sustainable agricultural practices. So there, we rely on environmental certifications when they are available. And we're also developing a network of local auditors who can visit the businesses to verify their practices. Of course, these adds cost, but it provides assurance to our donor partners that their funding is being used to promote the impact we care about. Yeah, thanks, Ade.
Thank you, Etienne. And as we wrap up, I'm going to ask all of the panelists to answer this one question. In one sentence, and from your own perspective, what does success for Aceli Africa look like? And I'd like Annalise to kick us off.
Well, to me, the ultimate impact would be that lenders start competing to get agri-SMEs and on board as their clients, and that the competition will be especially stiff for those SMEs that transform agriculture while restoring the environment, and also while recognizing and rewarding small farmers and rural communities in this global process of food system transformation. That would be the ultimate impact for me.
Excellent. Thank you, Annalise. Song Bay, what would success look like for Aceli Africa?
I mean, I would say that just the concept, the design, and the launch is a really big success in itself. And I would just use this opportunity to really encourage other donors to look at Aceli and to give it support. And we are happy to help with that process and answer any questions that they might have. Thanks.
Thank you, Song Bay. Edward?
Yeah, a success for me would be identifiable increased lending to agri-SMEs. At the moment, we're just guessing the gaps, and there's no credible data to prove that. So we would love to see that quantified in terms of number and also in terms of volumes.
Excellent. Thank you, Edward. Hans, in one sentence, what does a success look like for Aceli?
Success would look like to overcome failure of agriculture market in at least 2 of the 4 target countries, with an exponential growth of responsible agriculture investments, and also then policy adjustments by the national authorities in order to promote smallholder agriculture, also to adopt those blended financial instruments, and thereby offer an exit for Aceli then to spread it or replicate to other countries. Thank you.
Thank you, Hans. Etienne, you have the final word. What would success look like for Aceli?
Yeah, thanks. When the financial incentives we offer translate into, enterprise growth and ultimately improve the livelihoods for farmers and workers, yes, that will be a success.
Excellent. Well, on that note, I would like to thank Etienne, all the panelists and speakers. We've covered a lot in the past 45 minutes. And I would encourage you all to read the Convergence case study written on the Aceli Africa vehicle, and also to visit the Aceli website to learn more. Thank you.